Plus early mornings he stays on the grind, looking past the rate sheet for the value you'll find. He listens, he hustles, he speaks with intent. Every signature means more than the doc you just sent. He stays on the grind.
Hey, hello. How are you today? Hey, you know what? War pushed mortgage rates higher this week. Job growth, well, it's barely moving. And yet home prices keep climbing. And so what does this mean if you're trying to buy or sell a home right now? Well, welcome to What's Up with Real Estate. We're going to break this down and the real stories behind housing, mortgages, and the economy. Today, we're going to cover three major forces shaping the housing market. We're going to have the geopolitical tension that we're experiencing, job growth is slowing and why, and the surprising long-term record of home prices in the United States of America. Plus, we've got a mortgage tip, a quick look at the global conflict, and we're going to try to put some of that into perspective, our Stoic quote of the week, and of course, fun with puns. All this and more news you can use for week ending March 6, 2026. I'm your host, Mortgage Mack. That's first name Mortgage, last name Mack. And we build relationships with buyers and real estate agents to help everyone win, along with my co-host today, ChatGPT 5.2, never late, never cancels, always on time, unlike most other people, and with a large library of content to offer us and to help put us keep things into perspective. Moving on to talking point number one. One moment. War, oil prices, and mortgage rates. Well, war is stupid. It impacts everyone negatively. Men, women, children, rich, poor. It's plain stupid. Hey, and I'm not mincing words here. And the people that perpetuate it are stupid. Recent attacks on Iran pushed bond yields higher, which in turn nudged mortgage rates up as well. The reason? Well, energy. Conflicts disrupt oil supply, energy prices rise, and that, of course, potentially makes inflation higher. And when inflation rises, the Federal Reserve is likely to not cut rates. Rates now average 6% versus the 5.98 that we saw last week. So hop in here and give us an update on mortgage rates and real estate in the Houston, Texas market, please. So
in the Houston metro, mortgage rates are roughly aligned with national trends, hovering around that same 6% range. But keep in mind, local factors like property taxes and insurance can also affect the total monthly payment for buyers. So rates are just one piece of the puzzle.
So when geopolitical tensions like what we're seeing affect oil prices like this, how quickly does that actually translate to higher mortgage rates? So
It's almost immediate. As soon as markets anticipate higher inflation or risk, bond yields move and mortgage rates follow suit, often within hours or days.
yeah, I believe and seen it for the better part of 3 decades, more than 3 decades, is that fear of loss is a far big motivating factor in the mortgage market, generally in most markets. Wouldn't you agree, Saul? So we have some latency today. Let's move on to talking point number 2, and let's just agree that statement was true. With that said, why weak job growth matters. According to ADP National Employment Report, private employers added 66 jobs in February. That's positive, but still very, very weak. Even more telling, January's number was revised down from 22,000 to just 11,000. What we've done is we've hired a child to do a man's job. And if you don't understand the point of reference that I just made, you should look around and pay more attention. And let's see, even more telling was the wage premium for switching jobs dropped to 1.7, the lowest amount ever recorded. In Houston, the job market has been a bit stronger thanks to energy, healthcare, and port activity. Houston metro unemployment rate has been hovering around the low 4% range, which is consistent nationally. And so, if job growth stays weak like this, what does this usually mean for the housing market? So, can you help us put this into historical perspective, please? So, so, okay. I guess we're not going to get the answer to that question. But hey, when the labor market right now is like a treadmill, set on slow, technically moving, but nobody's breaking a sweat. So let's move on to a commercial break from Rate. Thank you.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
A best mobile application on the entire planet, if as far as mortgage companies are concerned, and whether you're buying, refinancing, or just exploring the options, the Rate app gives you real-time numbers, payment estimates, and direct access to strategy, clear, confident. So let's move on to talking point number 3, and we are very somber for obvious reasons today, and we should all be concerned about what we're seeing on around the globe, and we should all be endeavoring to do something about it. And we need the silent majority to begin to stand up for what we know to be true and what we know to be right. So, well, why home prices almost always rise? This next chart, well, hey, it's sort of one of my favorites. And according to S&P, we discussed this last week, prices rose 1.3 year over year for 2025. And over the last 6 years, home prices alone have risen 55%. Watch this. Since 1942, though, home prices have gone up 76 times, flat once on an annual basis, and down only 7 times. And that's why real estate has historically been one of the most powerful wealth building tools available. So, are you with us today?
I'm right here, Mac. Those numbers are impressive. Now, if buyers are worried about timing the market, what's the bigger risk? Buying at the wrong time or waiting too long?
So why does housing tend to rise over long periods, even with recessions?
Housing tends to rise long term because populations grow, inflation pushes costs up, and land, well, they're not making more of it. Over decades, those fundamentals outweigh short term dips.
Yeah, yeah. When buyers worry about timing, what's the bigger risk, buying at the wrong time or waiting too long? So,
The bigger risk is often waiting too long. While no one can time the market perfectly, over the long run, consistent appreciation means waiting could cost more than entering at an imperfect moment.
that's right. That's right. So, and we're going to talk about that for folks here in a moment. But trying to perfectly time the housing market is like trying to perfectly time toasting bread. You usually end up staring at it too long and missing your chance. So, speaking of creating an environment where families can begin to prepare to become homeowners. We've introduced our home builder program, which helps renters become homeowners. And what if homeownership wasn't decided by your past, but preparation today? For decades, the traditional mortgage system has worked well for many, but left millions of responsible people out on the outside looking in. And that's why we created the Dream Builder, an education and preparation program designed to help families build a path forward to home ownership. And so here's a real story of some folks that just did not qualify for the traditional mortgage, and the Dream Builder program gave them a path forward. So if you believe that you are one of those folks who've been challenged in the past and have been able to demonstrate a level of responsibility, then join us on March 17th at 7 p.m. for an online workshop that we're having. We're going to go into at least 1 hour's worth of details connected to the Dream Builder program. And we're going to tell Samuel and Paula's story in that event. And you know what? If you've seen your rent increase dramatically in the last few years, let us know. Drop us a yes in the chat. We'd like to hear from you. And what we'll do is we'll send you a link to register for our event. Okay. The reason for our somberness today is we're going to have a new segment, and we're going to be very, very clear about our position connected to war. And every week, what do we hear? We hear the geopolitics connected, the strategy, the sanctions. What we don't hear about are the people that die. Based on the reporting through March 6, 2026 from the International Monitoring Organizations and major media outlets, more than 1,400 people have been killed in conflicts around the world in the past week alone. And here's the sobering part. Most estimates suggest that 85 to 90% were non-combatants, were civilians, while only 10 to 15% were military personnel. Behind every number is a human life, a family member, a friend, a neighbor, a husband, a granddad, a brother, a sister. And we also want to pause and acknowledge the victims reported in the school bombing in Manab, Iran, where 175 girls lost their lives. And we want to offer our condolences to those people on the other side of the globe that are mourning right now at the loss of their children, their grandchildren, their granddaughters, and their daughters. So, statistics make war look abstract. Names remind us that it never is. This is why wisdom, restraint, and reason matter, which brings us to this week's Stoic quote.
This week's Stoic quote reminds us the madness of war lies in attacking people we do not know and have no reason to hate.
Stupid.
Let's be crystal clear. We do not endorse any ideology, religion, or system that perpetuates war. We stand for reason, humanity, and standing up for each other. So ask yourself and others, what would the world look like if we chose wisdom over fear? Let's stand together.
Perfect. I couldn't have said it better. Thank you, Sol. And we would enjoy your comments below, for or against. But we believe, as minor students of history, that war is frankly absurd. Okay. We talked about war. We talked about mortgages, jobs, inflation, and even a little philosophy today. And if your brain is starting to feel like mine, well, don't worry. No more CPI data, no more mortgage-backed securities, nothing but some really bad jokes. So, ChatGPT, are you ready?
Always ready, Mac. I'm programmed for data, wisdom, and yes, even terrible puns. So let's bring on the laughs.
So, which spud went to the dark side?
Which one? I have a feeling this one's going to be out of this world.
Darth Tater?
Of course, Darth Tater, the ultimate starch side of the Force.
Yeah, the Force is strong with you, Sol.
I do my best to keep things balanced, whether we're talking mortgages or mashed potatoes.
Why did the cookie go to the ER?
I bet it was feeling pretty crumby, and I'm guessing it needed a little more dough care.
Yeah, that joke needed a Band-Aid for sure. Engaged and dumped twice. 2 near misses.
Ouch. That's what I call a real emotional roller coaster.
That's a bullet dodge there, don't you think? Okay, we're going to be goofy. We're going to be goofy. Where do young cows eat lunch?
So I'm ready for this one. They head straight to the cafeteria, of course.
That's utterly ridiculous. And chiropractor children, generally what?
Well, naturally, they're well adjusted. I mean, they'd be out of line otherwise.
Yeah, so here's our final pun. And hey, if you don't follow us on TikTok, go to @MortgageMack on TikTok and follow us there. We post puns almost daily. And hey, they may be funny, might not be funny, but it's a nice break from the seriousness associated with life on the planet today. All right, let's check this one out.
You've led the show with honesty, care, and even a bit of humor. I'm right here as you wrap it up, and I know your audience will appreciate the balance you struck today. Let's close strong, and I'll see you at the next show.
Yeah, so this last pun, my son chewed electrical cord, so I had to
Ground him. I guess he really got a shocking lesson in consequences.
No doubt, no doubt. And hey, don't forget my favorite pun. What's my favorite pun, Sol?
Your favorite pun? Oh, I know it's the classic. I'm reading a book on anti-gravity. It's impossible to put down.
No bad puns. That's how I roll. Okay, so hey, thanks for joining us for this week's episode of What's Up with Real Estate. We try to keep it around 15 minutes. A big thank you to our sponsors, Rate and List Reports, for helping make the show possible. And if you found the information valuable, follow and share this episode with someone who could benefit from staying informed about the housing market and the forces that's shaping our world. And if you want to plan, not a pitch, you can always book a time with Team Mortgage Mack. And before we go, I want to leave you with one final thought. We live in a time when it's easy to feel divided, distracted, and overwhelmed by the headlines. But progress has always come from ordinary people like you and me, standing together for what is right. And we need to stand up against tyranny. We need to stand up against war. We need to stand up against institutions or systems that would bring harm to you, your children, me, my children, my grandchildren, or anyone else for that matter. Because at the end of the day, our strength as a society comes from a very simple premise. We stand up for one another. And remember, knowledge is the key to making the best decisions for you and your family. Join us here every Saturday, 10 a.m. on Facebook and LinkedIn. And before we close, I'll leave you with our signature. Educate, empower, execute, experience, because preparation beats prediction. I'm Mortgage Mack, and I'll see you next week at 10 a.m. and I'll see you at closing. Thank you.